we are revisiting a topic that's central to every trader's journey: trader psychology.
Problem with traders, most traders they try everything. It doesn't work.
All you can do is react to the market. You can't control the market.
The subconscious reason is to avoid pain.
So it's a choice between a small cut and a deep cut.
Statistically, women traders are better than men traders.
Janu is a very good trader.
Yes.
Welcome back to the Dxpert podcast. I'm your host Janu, and today we are revisiting a topic that's central to every trader's journey: trader psychology. And in one of our previous episodes, we have explored how traders deal with losses, manage wins, and combat FOMO. Today, we are taking things a step further by uncovering the hidden mental patterns that shape trading success. So joining me are our expert analysts June and Asado, who will shed light on how traders can develop stronger mental discipline, navigate uncertainty, and embrace the realities of a volatile market. So guys, in trading, there's always uncertainty, right? Whether it's predicting market movements, timing entries and exit, or dealing with unexpected events. So question is, how can traders mentally prepare themselves to navigate this uncertainty without letting it cloud their judgment?
I think uncertainty, right? Okay, uncertainty will only be uncertain if you are unprepared. Wow, I think it's a nice quote, man.
Thank you for watching.
By June.
See you next week.
Did someone say this before? I don't know, it just came out of my mind.
No, I never heard it. Personally, I never heard it.
Yeah.
So,
if you feel uncertain, which means you are not actually knowing what you are doing.
not prepared enough.
Yeah,
you know?
not
Exactly.
prepared enough. Yeah.
Yeah, nice.
So when I always start my analysis by looking at what the market is saying or the feeling of the market. So at least I know what they are thinking on the assets that I will be investing or trading. Yeah. So recently, let's take Nvidia as a reference. We know that they released their quarter report last month. So we can see that even though the report says that it's very good, but actually the earnings call is the one that is more important than the actual report, because in the earnings call we can hear that their projections wasn't that good because due to the margin issue, and also they have problems producing their chips. Although the chips is very good, but if you can't produce, that means there's nothing. Right? True. So doing all this homework, not just looking at the headlines, not just looking at the numbers that you can find, is because usually the things that you can find on the web is quite summarized. It doesn't really tell you the bigger picture or the very detailed things. So if you are uncertain, which means you are not looking at the details, you are just looking at the the general one. Yeah. So,
going in depth.
Yeah, you have
the
to
answer.
always go in depth, which is why Dxpert, we are actually doing this for you.
Exactly.
Yeah, we are always going in depth.
You're welcome.
Yeah, you're welcome. Yeah, we are doing a lot of the heavy lifting for you.
Yep. Also, I can add the same concept, but maybe put it differently. The most important thing is to have a process and a specific strategy you follow. Okay, what I mean by that is process is to do something should be easily repeatable. So, for example, you need to know what time you sit on your desk to trade and what time you leave. It should be every day or whenever you're trading the same, So you can't come today, let's say at 10 a.m. to trade and leave at 4 p.m. and tomorrow come at 2 p.m., leave at 3 p.m. It doesn't work like that.
Really?
It should be the same thing, for me at least. Something repeatable easily. Another thing is strategies. You can't come to the market every day with a different strategy in mind, or you're gonna try something new today. If you're a short seller, you only short. If you're long buyer, you only go long. But if you only go long breakouts, you only go breakouts. So it shouldn't be random.
Yeah.
Problem with traders, most traders are, especially beginners, they go random. They try everything, every day something new. It doesn't work. And even you can go even more in depth in it. Sometimes if you drink a coffee, you need to drink the coffee every day at the same time. If you don't drink it during trading or during market hours, then don't drink it. If you drink it before, then drink it before. You should know yourself, you know. So this is it. Yeah, you can go as much as you can in depth in it, but it should be something repeatable, which can save you,
Okay.
keeps you disciplined.
Ultimately, you're saying build a discipline
Build a
around
discipline,
trading.
exactly, and that's how you build discipline. You consciously decide what you want to do, the easy things, the easy tasks, and you do them every day.
It should be repeatable, and it should be something that is tested.
Oh
That
yeah,
you actually
Of course.
understand what's happening. Yeah.
Sure.
Yeah.
Yes,
Because if
yes.
you were to repeat the wrong thing over and over again,
Oh yeah.
oh man,
Yeah,
oh
yeah.
man, I'm not gonna stay.
All right, and
Okay.
many traders fall into patterns like revenge trading after a loss or over trading out of boredom. So, what practical steps can traders take to recognize these habits early and break out of them before they lead to bigger issues?
Is trading a hobby?
Nope.
No.
No.
Why? It's a serious job.
It is a very serious job.
Yeah. It's
Yeah.
it's yeah. I take it seriously as
If
well.
you want to treat it as a hobby, then it's pure gambling for me. Yeah.
But yeah, sometimes every market they have their own timeline. So if you are waiting out for your trade to happen, go find a hobby, go do something else.
Exactly. Yeah.
Yeah, yeah.
Yeah.
So yeah, we have to recognize that things as in the market takes time to move. It's not like the moment you enter it will happen the next minute or the next second. So if it's gonna take a few days, you have to wait out a few days. So get a job, do something else, go shopping, go date with your friends. No, with your girlfriend. Yeah.
Better. Yeah.
So yeah, one example, right? I think the market has like take Bitcoin as an example. The election just happened recently. We know that no matter who wins, crypto, as in both of the candidates, they are pro crypto. But Trump is very pro crypto. He's very, very supportive. But Kamala Harris, okay,
Yeah. Half.
a bit, yeah, half. Yeah.
Yeah.
So we know that if both of either one, no matter who wins, crypto is gonna get supported.
Yeah.
The only issue here is that whether it's gonna shoot up or it's gonna slowly move up.
Grind up. Exactly.
Yeah. So just with this example, we can see that the fundamental is always there to support any prices. Yeah, if it's gonna move slowly, then trade it and trade it with that timeline. Don't rush, because you can't rush. All you can do is react to the market. You can't control the market. Always remember this. You have to react to the market. Yeah, if the market is gonna move up, if it's gonna shoot up, then go in immediately, right? As long as the fundamental supports. Yeah.
Also, to put what he said differently again, revenge trading comes from when you're not following your trading strategy, your process that we just talked about. Because if you're following the process, you're following the strategy that you have. Let's say you're a breakout trader, you wait for breakouts, you go long, you know where to put the stop, you know where to take profits, and that's it. You know, if it takes you out, you take a loss, you cut your losses, you accept, because you know in the long term, the statistically, you know, it's with the strategy. So in the long run, you're gonna be profitable. So But when you do something that is not in your strategy, you're trying something new or randomly trading, that's when you get triggered to revenge trade because I want to get my money back. I don't want to
Yeah.
lose this. It's not considered. Even you say, just talk to yourself. You say that it's not in the strategy, so I shouldn't have lost it. So please, market, give me my money back. That doesn't work.
Or at least let me break even.
Break
Yeah.
even. It doesn't work like that. So that's why it's crucial. It's very, very important to have a process because it helps you. I'm not saying it eliminates completely because you need to do it consciously, this work.
And risk will always be there no matter what.
You need to accept the losses, of course, because statistically, losses should be
Normal.
lower. Lower than the profits, of course, in the long run. So it's just part of the business. You take the loss, you take the profit. In the long run, you're profitable. That's trading.
I mean, just by listening to this, you can hear that Asado is basing his points on technical side, and I'm basing my point on fundamental side. But both
They're
of us
both
are not wrong.
complement.
Actually, you should complement each of these analysis into your own analysis.
Exactly.
Yeah.
Okay, and emotional resilience is key for long-term trading success, especially when dealing with losses or market volatility. So, what strategies or practices do you guys recommend for building this kind of mental strength?
I think your mental strength, it always comes with understanding what you are doing and because when you understand what you are doing, you will have the confidence to do what you want to do, right? If let's say today I'm asked okay, if I want you to cook some food, right? But if you don't know how to cook, you're gonna get panic immediately, right? But if you are a good chef, no problem, I'm gonna cook right now. How many how many how many portions do you need, right? So the same thing is gonna happen here. Always backtest your strategy, so you know when it's gonna work, when it's not gonna work, because the market always changes. So use the right strategy for the right situation. Again, don't rush. Choose the right strategy. You can always change accordingly as the market move.
So for me, traders need to understand what losses are, because whenever we are not cutting our losses, we are letting the losses to run and get bigger and bigger. There's always two reasons, where we say to ourselves. One of them is the conscious reason, and the second one is a subconscious reason, which is always the same. The first reason is what we say to ourselves. It's like
It's gonna come back.
One of them is, in this example, let's say that I'm on a loss and it's going against me, the trade, but we're hoping that it's gonna come back to break even at least and get out to break even, so I can be good again. But the subconscious reason is to avoid pain. It's always about avoiding pain. So another scenario is you're letting your losses run because an indicator, let's say RSI, is showing that it's overbought. So I'm sure it's gonna pull back right now, or whatever. Again, this is the conscious reason, but the subconscious reason is you're avoiding pain. So to understand this, to get and cutting to cut your losses quickly, is to understand the real reason, which is you don't want to face that pain. You don't want to feel that pain. So if you understand this chart in a way, in my mind, you understand the real reason why you're not cutting the losses quickly when you should have, because it should never get to the point that you're hoping. Whenever you get to the point that you're hoping, that means you're in it deep.
You're gambling on your emotions.
It's not gambling only, it's you're emotional. You shouldn't let yourself to become emotional. So if you cut your losses quickly, you don't get it's not painful. Yes, it's a bit stingy a bit, But it's not painful. You
At
know?
least you can still recover from
You
that.
can
if
recover
it's
the
a-
next trade,
if
of
it's
course.
a small one.
Yeah.
Because the worst case scenario would be you're
Yeah.
hoping for it to bounce back
Yeah.
and it gets
It doesn't
worse.
bounce.
Exactly.
Yeah.
Yeah.
So that's it.
So
Yeah.
it's a choice between a small cut and a deep cut. Yeah.
Exactly. Small cuts are always better.
Okay, and also, guys, I would like to bring up a conversation we had prior to the podcast. So, June and Asado mentioned to me that women traders.
Oh yeah.
Yeah.
Can you say it again, please?
Statistically, women traders are better than men traders.
Yeah, because they are more patient.
And I think they have a bit lower ego, you know.
Yeah.
So yeah, unfortunately.
So that means Janu is a very good trader.
Yes.
Well, okay, and markets are constantly changing, and strategies that work in one phase, like you mentioned earlier, may stop working in another. How can traders develop the mental flexibility to adapt their approach without losing confidence or becoming overly cautious? And I think this definitely comes with experience. So, because you guys are experienced traders,
So we
you
can
guys-
switch anytime.
Yeah.
Yeah.
Can you guys speak? Tell us how you guys work through this in your experiences.
Of course. You want to go first?
Okay. Okay. If I'm trading on my own, as in my own money, I get to choose whatever products that I want because it's my own. I'm risking my own money, right? Yeah. So, I usually look for trends in any assets that I want to trade. Yeah, which is why, yeah, because I'm starting from fundamentals and then I move on to technicals. And so in the technical side, I'm always looking for a strong trend, or at least there needs to be a trend for me to get in. Yeah, because that's where the money is easiest. Yeah, when there's a strong trend. Yeah, so I usually look at the news portal, looking for data. I'm a very data driven person. Yeah. So if I'm managing money, sometimes I don't get to choose as much product as I have because sometimes some brokerage they have limited products, right? So it depends on the situation of that asset. If it's moving sideways, then I'll immediately switch to a sideways strategy. Yeah, if it starts to trend, then I'll switch to a trending strategy. Yeah, but in the end of the day, all this strategy, they are all tested. We have back tested it. So I myself will have confidence in using it. Yeah. So that's how the flexibility comes in. Yeah.
Comes with experience.
We need to
Yes.
also
So-
remember. You finish.
Yeah, I think one example that is easier to understand is if you're driving a car now. I think most of us are actually driving a car. So you usually drive a sedan, right? If you are going work or your daily drive, but you can't drive this into a mountain, right? You usually need a 4-wheel or
Exactly. You
a
adapt
rover.
to the
Yeah,
situation.
Yeah.
exactly. Yeah, so it's the same thing. Yeah, you have to switch car. Switching car, that means switching your strategy to bring you where you want to go. Yeah.
And this is it. This is the awareness of each market cycle. If it's a bullish market cycle, you implement bullish strategies.
Yeah.
If it's in a slow market or it's consolidating, you implement consolidating strategy. Or it's a bear market, you implement market strategies. You can't go do a bullish breakout trading in a bearish market. The probability is that you're gonna lose. So you need to adapt to the situation. You need to be aware in which cycle we are now. But the problem is with beginners that
It's hard to determine.
it's hard to have developed these different kind of strategies
Yeah.
because you first start with one strategy.
Yeah.
In any market you want to choose, just start with one. But if let's say in a bullish market you're trading on breakout strategies, but then when the market changes, you need to adapt and look for another market, trending market, and go trade there. You don't get stuck in one currency, in one commodity, or on one stock. Just open your mind wider and look on all the market what's happening, and look for markets that can you can implement your trading strategy.
I think that's, yeah, since he's talking about this, I think there's two situations. One is going by your strategy, another one is by going based on the asset that you are trading. So some people, they are very, very experienced in one asset. So let's say you are trading gold. This guy, he trades gold only. He doesn't trade anything else. Yeah. So he adapts strategy based on
But that's
gold.
harder. That you need to be experienced because you're using multiple strategies.
Yes,
As a beginner,
exactly.
they only know
One or
One.
two, yeah.
and you can only
Yes.
get good at one, and then later
Yeah.
on you add to your arsenal different strategies for sure. But as for beginners, start with one, and then later you can add.
Yeah.
And I guess with practice, like you guys say,
Yeah,
your confidence will grow, and
course.
you wouldn't be as cautious as you move towards it, because trading does come with risk.
Oh yeah.
Yeah.
The cautious comes with managing your risk, not avoiding it.
Oh
Yeah.
yeah.
If you
that's
avoid
true.
it, then
Yeah.
the opposite
You're-
will happen.
Yes.
You're basically pushing your opportunities away.
Yes, exactly. So it's a balance between taking it or not taking it. Yeah.
All right, guys. Well, that wraps up our final episode of the year.
Oh yeah.
Asado and June, thank you both for those valuable insights and helping us
welcome.
close 2024 on a high note. To our listeners, we want to thank you sincerely for being part of our Dxpert community. And looking forward, there's so much we'll explore together in 2025 as
Yeah.
new challenges and opportunities arise. So, as we step into the new year, we hope you continue to tune in, follow along, and grow with us. From all of us here at Dxpert, Merry Christmas and, Happy New Year. And here's to a successful year ahead. Remember, stay informed, stay ahead, and we'll see you in 2025.
Merry
Bye-bye.
Christmas.